So the thought process behind purchasing certain stocks. In this case, this is Samsung Electronics. This is the London stock market. Okay. Yesterday I purchased it at I think it was 0.35% down. So today it's down by from yesterday where it closed off 0.51. Now the reason why I want to buy this is because A, Samsung is a stable stock, it's safe. Yes, it's going down, but that's when you want to buy. And two, it's been going up. I know it goes up. Overall, it's been down, but this at some point last week or so, it was up here somewhere. It was really high, so it was in positive. Now, overall, as you can see, it's 3 months growth. It's been quite good. A year has been quite good as well. Forget that, but that's reflected upon a number of different factors, like the massive dip here, which is probably at some point could be the corona time, but in any case it's on an up trajectory, so it gives me confidence to buy this share. Now here we are 0.51% down, so I'll buy that now. It was down earlier a little bit, but I missed it. You gotta have enough money in your bank, because I was transferring between my account and the bank. In that time, I missed 0.4% in that time I missed out on, which is quite a bit of money. So what I'm going to do, because this is a lot of money, one share is about $1,355 and 99 cents. I'm only going to purchase 0.1 share. I already purchased 0.1. Now I tend to purchase them in this sort of round figures, 0.1 or 0.5 or 1 if they're too big, and unless so go ahead with this. All the details you need to know, and that's done. Okay, so hopefully it will show up here. So I'm down overall, but it's okay. It's fine, because that's when you want to buy, isn't it? That's sometimes the thought process. So I'm just going to scan through my app and see if there's anything else worth buying. I'm quite disciplined. You've got to have discipline in trading, otherwise you could fall into a trap. So no point looking at popular stocks, because they're usually American. They're not available at the moment. UK stocks, the banking sector's having a horrid time. I bought the GSK. I bought that on low yesterday. Ocado, I'm up on Ocado. I got a fair bit of share on that. That was a risky stock when I purchased it. It was way down, so that was a good move. But like I said, one thing is that you have to learn to master not to trade on hindsight, because everything's great on hindsight, isn't it? But in reality, that's not really how we do trade. We can look at the past charts and stuff to kind of predict things in the future, but it's not always accurate. So BP, I'm plus on it overall, because I purchased it when it was way down. As you can see, I'm up on it, even though I was up on it by 8% overall, but it's dropped quite a bit. As you can tell, it's been declining for the last few days. So I do have other energy purchases in my stock, even though it's quite low. This was my first ever purchase, actually, so I'm quite proud of it, but I should have purchased more. Again, that's hindsight. However, I'm not making a judgment call based on hindsight. So what I'm going to do, because that would be a incalculated move. So what I want to do is go on my stock profile. Nope, that's not it. Where am I? Okay, I need to. What is going on? Yeah, let's get out of here and then get back in. Okay, so I've got other, like Shell. I've got while I'm here, just do a quick check. I'm okay with my current stocks. I don't want to purchase anymore. I'm happy with where things are. This is the one I'm keen on increasing my stock portfolio on, but unless it drops into red, I am not going to purchase. And that's another sort of policy I have, or strategy or principle, that unless something's in negative, I won't purchase it, because you could really fall into a trap that way. And whatever strategy you have, you should stick to it. So I stick to my strategy, and so far it's been working for me. So usually the reds, after you bypass the red, eventually, hopefully the following day you will get into green. So this is another stock. It's a UK retail property market stock. So as you can see, market cap's quite big. Dividend yield is 3.37%. Revenue is relatively good. Beta rating is quite good. It's a regular dividend payer. So will I purchase some because it's quite low? I probably will, because I do like to increase on those stocks. The reason being I'm increasing my property portfolio stock is purely because of, I know the UK property is really, really down at the moment, and that's when you want to purchase things, because when it's down, it's the time to purchase for the long-term growth. Seville, I did purchase. I'm going to purchase. I don't know. This is a really good stock. It's been climbing, but anyways, here gone 0.442 is okay. Not by stock, yeah. It's only a small share, but hey, everyone adds. So what I do is, unless something is worth purchasing, I won't just purchase. I'll just add to my current crop of stocks. As for capital, I did increase the stock earlier today, so I won't touch any more on that. Rightmove, I've increased Rightmove, so I won't do that. I'm happy with where it is. This is a stock that I've been after actually for the last week, and I couldn't get hold of it because the price has been up, but it's on down at the moment. So I'll watch this. I will watch this. I already got £100 worth of stock, so I'm already up on it, which is great. But yeah, I'll leave it at that for now. I'll watch this one. My other UK stocks are up. Oh yeah, as I was saying about, I've got other stocks that are energy driven. So for example, I have ExxonMobil, I have ENI. So I bought 3 shares yesterday when it was really, really down. So I've got other stocks that are related to Shell and BP energy stuff. So I'm not, Chevron for example, so I'm not really too bothered with increasing that, but I'll probably increase ENI stock because I like this stock for some reason. And one of the reasons why I like it is because it's a good dividend provider, and it's got a really, really strong market cap. Whereas BP, even though it's down at the moment a fair bit, actually it's bigger in terms of being an organization, but the other one provides 6% something yield, dividend yield, which is a lot more than this one, so worth investing into the other one. Having said that, I'll keep an eye on it. I might increase my shares into that one as well. So yeah, these are my current stocks. So as you can see, the thought process behind purchasing, it will be different from person to person, and whatever your strategy is, you need to stick to that. So I purchased it here. I will purchase this again because I've been after this particular stock for a while. So I don't mind increasing them regularly, which I tend to do. I'm happy with that because, like I said, is that within a year or so, property sector in UK should go through the roof. And when it goes through the roof, I mean, just look at this, for example. Let's have a look at it. So here we are, 1 week, 1 month. Okay, we're at the top in a bit, right? 3 months, we're still below what it could reach, right? We can hit, I think it's 460. So we can hit £5 potentially, but then look over a period of a year, and then look at its real potential. So we could really potentially, close to doubling our figures, our purchase. And that's the good thing about it. That's the really, really empowering thing about this particular stock. But more so, the dividend is quite good. It's got nearly 8% dividend, and it's UK, so that means I don't pay any tax to the American government for dividend. And because I'm using my ISA, I won't get any tax on gain. Also look at the market cap and the revenue, as well as the PE ratio, as well as the beta rating. Beta rating is a bit high if I'm honest with you, because one is really good. One is the index itself, which is the stock market itself. Anything beyond one, it's so and so. But then near to two, it can be volatile. But because it's got a PE ratio of 5.6, I'm okay with it. And plus, it's a long-term company, so it's got strong, holding position, and that gives me confidence. And I think Bat Homes, essentially, they are the largest property developing company in the UK. So again, that gives me a bit more confidence. So I look at all of these in the data to make a decision when it comes to buying stocks. I increased that yesterday. That's one of my penny stocks, if you like. It goes up and down a lot, but like today is up by nearly 10%, which is like wicked. Thank you very much. But overall, I'm only up by 6% on that. Anyhow, so that's just a brief take on the thought process behind it. Just to compare the beta rating, look at Apple. Another thing is that I won't purchase any stocks unless they're really worth investing, or I feel like I want to invest in that, like the UK property market. I want to invest into it right now actively. So hence the reason why I'm quite bullish with investment. But like for example, Apple, unless Apple drops by quite a bit, I won't invest into Apple purely because watch this. It's a very steady growth company. Can you see? As you can see, and it's going to continuously increase in its growth. So it's not worth purchasing unless it's under certain. I know it's a negative by quite a bit, not just like a little bit. For me, it has to be under by minimum 0.5 in order for me to consider investing into safe stocks like Apple. And Apple is very stable. As you can see, it has a over 3 billion trillion market cap. Dividend is 0.5, which is really poor. But look at the beta rating here. That's 1.29. So 1.29 is very stable. It's very close to the index market itself. So that gives me confidence. Well, not confidence, but you know what I'm saying in terms of reading the data. So beta rating of 1.29 is very close to the market cap. Stock market itself. Which means it's very stable. Amazon. Let's look at Amazon quickly. So Amazon is again very strong beta rating. But then you look at this particular stock, its beta rating is close to 2. But then you look at this one. Now this stock is expensive, so I only bought like a small percentage of it because I was keen on investing in this particular stock, as it's a really strong stock, but it also grows quite steadily. Look at the beta rating; it's below 1, which is amazing. Hence why I bought it. But then you got things something like Big Commerce. Oh, hasn't got a better rating. Wow, okay. Let's look at this one. Why isn't it loading? Okay, look at Centrica. That's British Gas essentially. 1.55. That's not bad. This is another safe stock. I increased my shares in this. Yeah, so when it comes to purchasing stocks, you do need to know a little bit about economy. You got to have an understanding of the economy, why the economy is down, what's causing it to go down. So, for example, a lot of the British property stocks are down purely because of inflation and mortgage rates, as well as, primarily is those two really what's causing the economy to be on its knees. But then stocks like this, for example, it's been positive lately, and that's that's the largest Chinese electric car company. So stocks like those are on up purely because the West is getting ready for electric car transition in about 2030. So then that means that once they become the common cars on the road, but it'll take a bit of time. But the point is, it is the way the future is heading. So right now, these stocks are low, but at the same time, they're growing better than other stocks purely because they're on the growth strategy and growth trajectory. So then they will plateau at some point, but they haven't reached their height yet. Same with I bought here NIO. So that's growing. That's another car company, electric car company that's growing. I will increase my shares in this particular company when they drop in negative. So as you can see, they're in green at the moment, so I won't purchase anything, and they're growing, so I'll leave it at that. But when they have a little dip in red by 0.5%, I will probably purchase a share. Palantir's just got a contract with the American government with regards to working together in cybersecurity and nuclear and stuff like that. So it's worth investing in this. So if it's on 0.54, I will invest. I will buy a couple of more shares. Its overall price is much higher than what it was anticipated by the experts and analysts, but I think it's a stock worth paying a bit over the top, which I wouldn't normally, but in this case, I'll make an exception. Like Plug Power, I'm focusing on green energies and renewable energies, but most of green energies like electric energies and stuff like that, purely because I think that's where the world is heading. But the companies like Shell and so on, they will still have a market dominance purely because of the fact that they've been around for a long time. So it's also worth investing in those old school stocks because they will not just simply collapse. They're worth billions and billions. They will also adapt and change, and they're doing it. I think Shell has already started the process of moving into the green electric space, hydrogen space, as well as all the other green energy sector, basically. So the thought process behind purchasing has to be a number of factors. I'll probably talk about it a bit more in my next video.